Urgent. History is repeating. Mastering the market cycle.
It just seems different this time. These trade wars can turn into something massive where other countries just decide to band together and leave America in the dust. While this would hurt everyone across the world, this will definitely hurt our businesses here in America since we get about 30% of the revenue from the S&P 500 due to exposure internationally. Since President Donald Trump announced his sweeping tariff policy over a week ago and sent global markets into turmoil, the US stock market has lost trillions of dollars in wealth. All the major indices such as the S&P 500, the NASDAQ 100, and Dow Jones Industrial Average are down for the year after markets reacted extremely negatively to Trump's new trade policy. History's repeating itself, and the best investors know exactly what to do in this situation. So I'm going to explain it to you using facts and data, along with extensive research from Howard Marks, who studies market cycles and is worth over $2 billion.
Okay, I just gotta say, just glancing at that, for a moment, I thought that was Daniel Craig as James Bond. I want people to glance at me and be like, hey, wait a minute, is that James Bond? That dude's rocking it right there. Clearly, I need to step up my style game.
By investing correctly through them. Now, when I say history is repeating itself, I'm telling you this looks exactly like some of the worst crashes we've ever seen. In the Wall Street crash of 1929, lasting over 4 years, the bursting of the speculative bubble in shares led to further selling as people who had borrowed money to buy shares had to cash them in when their loans were called in. This was called the Wall Street crash, and it led to the Great Depression. Then we have Black Monday in 1987. This was the infamous stock market crash that represented the greatest one-day percentage decline in US stock market history, culminating in a bear market after...
I'm going to point out something. I don't know if I can go back to this on the SPY. Maybe I can on the SPX, but this was already in a downtrend before this happened. Already in a downtrend before this happened. Let me see if I can do it. Let me see if it'll work. SPX. All right. I'm hoping that it'll have enough data for me to do this. So I got to zoom way, way, way out, and then I got to drag this over. This was 1987, right? Chris was an itty baby boy right then. I was so I was born in February of 86. So I was like 18 months old. All right, hold tight. I really do want to show you this, right? And the reason I want to show you this is because if you follow what we talk about, if you follow the point of trading with the trends, you wouldn't have been burned. In fact, you might have been set up to go short. Well, we're back in 99 at this point, so this is probably going to work. All right, we're at 90. We're at 89. Okay, 87. Right there, right there. Look at the volatility spike up. Right, remember we talked about ATR, how that measures volatility? All right, so let's zoom in on here. These are daily candles. Look at this. It was already in a downtrend. Right? We talked about red light, green light. Red light meaning a close under the 10 EMA. 1, 2, 3, 4, 5, 6, 7. 7 trading days before stuff hit the fan. And then a couple days later, the real 22% sell-off happened. If this doesn't change your mind that you can avoid big losses, that you can sidestep events, I don't know what to tell you, because the market tells you which way it's going, but you need to be listening. You don't need to put your head in the sand. You don't need to start dollar cost averaging when the market's going down, because something like this can happen. Will it happen? Unlikely. But it was also unlikely to have happened at this time, and it did. And not only did it do that, but it told you ahead of time. It told you ahead of time something wasn't right. So this right here should tell you you can avoid these big crashes. You don't have to be scared, but you do need to listen to what the market's telling you. So let's continue on here.
After a more than 20% plunge in the S&P 500 and Dow Jones. Among the primary causes of the chaos were program trading and illiquidity, both of which fueled a vicious decline for the day as stocks continued lower even as volume grew lighter. Today, circuit breakers are in place to prevent a repeat of Black Monday. After a 7% drop, trading would be suspended for 15 minutes, with the same 15-minute suspension kicking in after a 13% drop. However, in the event of a 20% drop, trading would be shut down for the remainder of the day. At the end of the 90s and early 2000s, we had the run-up of the dot-com bubble and then the eventual dot-com crash. In 2007 through 2009, beginning in late 2007...
I'm going to start stealing people's slides. I'm over this, like, let's play a cool game. I'm stealing everybody's slides from now on. Stealing. Thank you. Appreciate you, Dr. G, Professor G. Hold tight for just a moment while I drop this in my stolen data bank over here. All right. duplicate slide. I'll take that picture off of ETJ. Okay, let's go.
Then the eventual dot-com crash. In 2007 through 2009, beginning in late 2007, fears about growing debt, the growing housing bubble, and general economic weakness kicked off a selling spree in markets. This accelerated on September 16, 2008 due to US financial institutions failing because of the collapse of subprime loans and credit default swap securities. This rapidly devolved into a global crisis, resulting in a number of bank failures in Europe and sharp reductions in the value of equities and commodities worldwide. Most recently was in 2020. The S&P 500 index dropped 34%, 1,145 points, at its peak of 3,386 on February 19th to 2,237 on March 23rd. This crash was part of a worldwide recession caused by the COVID-19 lockdowns. Right now, we're feeling a bit uneasy because a lot of what I just explained sounds a lot like the first stages of what we're seeing today. No matter what your politics are, there's a bunch of uncertainty right now in the markets, and they all stem from the tariffs and other policy procedures that we're supposed to see over the coming months. The sharp drops in the stock market over these last couple of weeks are what's been scaring most, and the idea that Trump might be doing unrepairable damage all across the world. The fear and greed index is showing extreme fear overall. One thing that I like to remind
Okay. I do like when people point this out to show Outlier's version.
Damage all across the world. The fear and greed index is showing extreme.
So this is the CNN fear and greed index. And then as you know, we have the fear and greed index on literally every single stock out there. So I'm going to go to SPY. And right now, SPY is currently sitting at, oh, here, I can pop this open. 29.09. So it's sitting in fear, but not in extreme fear. Now, on other stocks, it's going to show the stock itself and then what was I trying to think of? The sector it belongs to. So if you do like Tesla on the left, it'll show the consumer discretionary on the right. But for the S&P, it's going to show the same. So a little less fearful than CNN's fear and greed. Just want to point that out.
Fear overall. One thing that I like to remind people is that we have history on our side. One book that I recently have recommended to my Patreon exclusive investor group is this one here, Mastering the Market Cycle by Howard Marks. It's almost eerie how spot on this book is.
I might have to actually, while he's talking, I'm gonna go on my phone and order that. Because as you know, I'm a big reader, and I have 5 favorite trading books that I tell people all the time. But I'm gonna go order that one real quick while he's talking.
He wrote this in 2016, and he called pretty much everything that happened in the next crash in 2020 for COVID. And the exact same thing applies for right now. The beginning stages of what we're seeing are in this book, and he talks about exactly how to get through it and how to become better investors because of it. So I'm gonna read it.
Well, if it's any good about that, it's literally $14.08. Right? That's what it says to ship a hardcover version to my house. Come on, focus. You can do it. It's not gonna do it, is it? I'm trying. Wait for it. Wait. Oh. This is not working out as well as I thought it would. Come on. All right. Not gonna work. $14.08. New. Hardback. Order it.
A couple excerpts from the book actually, because Howard Marks is a legendary investor worth over $2 billion, and he's much smarter than me, and he says it perfectly. All right, so he says, most investors swing between being greedy when they're optimistic and fearful when they're pessimistic. Most swing to those positions at the wrong time. Becoming greedier after the emergence of positive developments has caused prices to become elevated, and becoming more fearful after negative events have caused prices to become depressed. That's what we're seeing right now. He says the rational investor is diligent, skeptical, and appropriately risk-averse at all times, but also on the lookout for opportunities for potential return that more than compensates for risk. That's the ideal, but in good times we hear most people say, risk? What risk? I don't see much that could go wrong. Look how well...
Okay, we're gonna rewind that one.
Times we hear most people say, risk? What risk? I don't see much that could go wrong.
Wow. That is incredible, right? Risk? What risk? I don't see anything that can go wrong. How many YouTubers have we seen screaming that on stocks like AMD, right? Risk? What risk? What can go wrong? It's already hit the bottom. It has to go up from here. Or let's just go down the list here, right? I keep a list of classic YouTuber stocks over here. Tesla. Risk? What risk? What could go wrong, right? Only 120% up move, just evaporating. Let's go to... AT&T was actually pretty good. Let's go to SoFi. Risk? What risk? What could go wrong? Let's go to SMCI. Risk? What risk? What could go wrong? Let's go to PayPal. Risk? What risk? What could go wrong? Palantir. That was not so bad. But up here, risk? What risk? What could go wrong? NVIDIA. right? One you thought could never ever happen. Risk, what risk? What could go wrong? Microsoft, this can't go down. Risk, what risk? What could go wrong? Meta, we're just saying the same story over and over and over. Risk, what risk? What could go wrong? Why are we saying the same story over and over and over? This is how the market works. This is how the market works. Where is it? Hang on. This is how the market works. All right, let me zoom back in. And this is what causes it to work like that. Your other investors, not just you, screaming sell, 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 sell. And if you're the one dude, 90% of you are watching are men. So I'm just going to go with that. If you're the one dude who's standing on the tracks and the trend train is coming, you're like, hold up, you got to turn around right now. You're going to get run over. You're going to get completely pancaked. Right? You're going to be looking at the train coming at you like this dude right here, and you're going to be gone. The market can stay irrational longer than you can stay solvent. That's an old idiom, and it's played out over and over and over. Risk, what risk? What could go wrong? Well, that's good. I'm so glad he got this.
Look how well things have been going. And anyway, risk is my friend. The more risk I take, the more money I'm likely to make. But then, in bad times, they switch to something simpler. I don't care if I ever make another penny in the market. I just don't want to lose anymore. Get me out.
Ugh, I don't care if I never make a penny. I just don't want to lose more. Yikes. This is the wrong game for you if that's your attitude.
And that totally sounds exactly like what we just felt. Over the last year or two, it's almost been easy to make money in the markets. Pretty much everything was going up and going up like crazy. And so people were bringing down their idea of risk because they were like, well, I just want to make money. Who cares? And it looks like this is the easy way to do it. But because...
And that's, man, Professor G and I think we'd be friends in real life. I probably would have a little bit of resentment for him because he has way too much hair on his head. That's not cool, bro. Quit hogging all the hair. Some of us could use a little bit of hair, okay? But aside from that, I think we'd be gym bros and also finance bros together. But he's totally right. And so that's why all these YouTubers are looking like total idiots lately. And that's why you found these videos, is because you saw me calling out them, right? I only made 2,000 videos on YouTube before you heard of me. Only 2,000 videos of YouTube before YouTube decided, oh, we're going to push Chris out to all these people who are bleeding money. All these YouTubers who are telling people to buy the dip everywhere without telling them to buy on the right-hand side of the dip when stocks are crashing up, not when stocks are crashing down. This is great. Yeah, Bender, exactly. All stocks are bad. All stocks are bad. You know how many comments I've gotten about, hey, Chris, you're so stupid. How could you say all stocks are bad? There is always an opportunity out there, for sure. But that's because all stocks are bad, and only every once in a while do they act right. If you maintain that thought process, all stocks are bad, and every once in a while they act right, you're trading risk first. That's the only way you're going to stay in this market.
Because of that, now the market has changed in the opposite way, because it usually is that way when you go into volatile things like more riskier stocks or ETFs, and now everything's totally changed and everybody just wants out of the market. So let me explain to you not only what a normal market cycle is, but also where we are in this cycle, and more importantly, how long it's going to take for us to get out of this part of the cycle and into the next part, which is much more fun and where we make a bunch of money. But first, thank you to investing.com for sponsoring this video.
Sorry, skipping your ad, Professor G. You're getting paid for it, not me, bruh.
So don't miss out. All right, so Howard Marks continues in this book. And when I was rereading this book again over the last couple of weeks, this is what really stuck out to me and why I wanted to make this video. Most people think of cycles in terms of a series of events, and most people understand that these events regularly follow each other in a usual sequence. Upswings are followed by downswings, and then eventually by new upswings. But to have a full understanding of cycles, that's not enough. The events in the life of a cycle shouldn't be viewed merely as being followed by the next, but much more importantly, as each causing the next. So he's basically just saying it's not just enough to understand that we have an up, and then at some point we have a down, and then at some point we have an up. It's the fact that by going up and stagnating for a bit, it turns into a down, which stagnates for a bit, which turns into an up, and that's important.
He literally just described this chart that we talk about all the time. Stage 1, stage 2, stage 3, stage 4. Stage 1, it starts back over, right? It's exactly what he describes, what we talk about day after day. And it's not just theory. Not just theory, because that's exactly what happened here. And Tesla and AMD. Sometimes you have to zoom in more and zoom out more. But AMD, right? The examples go on and on and on because this is real life. Is this real life? Yes. Yes, this is real life. And when you understand this and start listening to the market instead of telling the market what it needs to do, you'll actually make money in the market instead of giving it to everybody else.
Important to understand. We all know when we look at the graph of the S&P 500 over the past 80 years that it's not just a straight line from left to right going higher perfectly. If we look closely or zoom in just over the past 5 years, we can see a lot of jagged lines where the market was up for a couple months, then down for a week or two, or vice versa. And even lately, over this year to date, we can see it hasn't been a straight drop down. It goes down a bit, then up a little, then down. Same thing with the overall market cycle. Howard Marks lays it out perfectly in the book with this simple drawing. Over time, markets generally go up, but there's a pendulum happening making it rise and fall, and then rise again in varying degrees. Marks shows this figure and said movements of a cyclical phenomena can be understood as taking place in a number of identifiable phases. So an A that's recovery.
I am so stoked to read this book, by the way. And then someone told me that it's also on Audible. Thank you, Peter. I will be getting that as well. One thing that Chris does, I'm an itty bitty baby boy, and my itty bitty baby brain likes to have stories read to me. So I actually like to get the paper copy so I can make my notes, put my little flags everywhere, and then have the audiobook read to me. Now, the reason I do that, it's not just because I'm an itty bitty baby boy, but it's because you actually getting two of your senses hit on reading it that way rather than just one, right? Rather than just sight, you're getting sight and sound. Now, if we could taste the book, I suppose you could be licking, you put a little barbecue sauce on it and lick it, right? You get three senses out of it. I wouldn't recommend that, but that is the reason I do it that way, because it gives you greater comprehension. So definitely worth it.
From an excessively depressed lower extreme or low toward the midpoint. B, the continued swing past the midpoint toward an upper extreme or high. C, the attainment of a high. D, then it's the downward correction from the high back toward the midpoint or mean. E, the continuation of the downward movement past the midpoint toward a new low. F, the reaching of a low. G, once again recovery from the low back towards the midpoint. H, and then again the continuation of the upward swing past the midpoint toward another high. The main thing that I got from this is that we're always going to be in cycles. We're always be in these market cycles, and so being able to identify which part of that are we in is so important as investors. These next couple of things are so important. Stick with me here. I know this is a little bit longer, but I promise you, if you can grasp what I grasp while reading this and while seeing and living through what we're going through right now, it has made a world of change even in my investing.
Dude, we're so similar. How many times have you let me read a book to you here on the live streams? I love Dr. G. He's real good.
Positive events occur, as described in the last chapter, in euphoria, optimism and greed rise. Investors tend to become less risk-averse than usual and less risk-averse than they should be. So one, since they feel better about the environment and are more optimistic about likely outcomes, they reduce the amount of caution they bring to the investing process. So this whole portion right here is talking about kind of what happened last year in 2024. The stock market just kept rising. It kept going crazier and crazier, but people kind of thought, well, I might as well jump in so I don't miss out. We should have seen that the risk was a bit higher, seeing that we had been going up nonstop for quite some time. And also,
okay, and that's why when I look at a stock in Outlier, specifically, I look to see how greedy it's getting. If it's getting more and more greedy, that's what I want to see. However, when it gets deeper in the greed, I pull back how much further up in greed I want it to go. For example, let's say right here, right? As it's getting more and more greedy, it's at like 70 right there, and it gets up to 77 or so. And the further it goes into the greed, the more likely it is to snap back. Professor G just described that exact thing. The more likely it is to snap back. And you can see it did something just like that right there. Now, it doesn't mean it's going to crash every time, but it allows you to keep more of your profits if you are trading risk first, saying, okay, I understand that people are getting greedy, they're getting greedier, and that's what I want to see, but I don't want it to get to the point where nobody else is left to be greedy, and then all the sellers flood in, all the fear comes in all at once. You can be reactionary and ahead of the curve when you think of it in that regard, right? And in fact, let me show you my exit signals on here, which with 3.0 coming might change. It's a very good chance, but I back tested these a lot. And I do plan on having a backtesting document so you can go through and do the same, and also check my numbers, maybe even give me some new ideas. But if it's 0 to 50, so if it's any sort of fear, and I get a buy signal, I would look to exit at one of these points, or if it hits 63 on the heat map. So for example, if I got a buy signal down here and it got up to 63, so it'd be about right there, that would be my exit signal before it comes back down. Now, if I get a buy signal and it's between 50 and 75, if I got a buy signal between 50 and 75, maybe something like this, I would give it a 10-point spread. So if it were 63, I'd go up to 73. And that's where I would be looking to get out if I already didn't have another exit signal hit. And lastly, if it was 75 or higher, I would only give it a 5-point spread, right? Because it's really greedy already. Because it's so greedy already, I want to make sure that I get my backside out of there before it has a chance to snap back on me. Brisket first. Brisket first. Yes, I cooked a beautiful Easter brisket this weekend, and it was tremendous. It was the best brisket of all time. Joe Biden wish he could have cooked a brisket as good as I did. Let's continue on.
Also seeing certain PE ratios and other metrics kind of yelling at us, throwing it right in our face, saying this is a bit risky. So anyway, since they no longer consider investing to be risky, they don't see the need for painstaking analysis. They tend to make assumptions that are more generous, and they replace skepticism with credulousness. They're willing to make do with a reduced margin of safety. Viewing risk as less worrisome, they no longer demand risk premiums as cushy as in the past. They behave less as sticklers since they're more attracted to the return on risky investment and less leery of the risk they involve. Last year specifically, and even at the beginning of this year, people were just throwing money at tech and AI, no matter what the valuation was, just because it was supposed to go up. So again, they behave
because it should go up, right?
less as sticklers since they're more attracted to the returns on risky investments and less leery of the risk they involve. He goes on here, positive events lead to increased optimism. Increased optimism make people more risk tolerant. An increase in risk tolerance causes lower risk premiums to be demanded. A reduction in demanded risk premiums equates to lower demanded return on risky assets. A reduction of demanded returns on risky assets causes their prices to rise, and higher prices make assets even riskier, but also attract buying on the part of momentum investors who chase rising stocks. So this exactly is what happened. To a certain extent, stocks going up is normal, and that isn't necessarily bad. But when they go too high, to the point where it's like, okay, something's up here, that just adds risk. And that's why all at the end of last year and the beginning of this year for sure, I've been telling my Patreon members and even video.
By the way, thank you, Dr. G, for proving my point. Right, when it gets so high, only so much higher can it get in greed before people come to town with fear, right? Before the fear wagon rolls into town.
Here on YouTube, I was saying we are going to have quite the volatile year in 2025. It might be a good idea to get more into value instead of just being in growth ETFs and stocks. Get into something like SCHD or value type stocks that are not necessarily going to be as volatile. A lot of people were just momentum investors and just jumping on the train that was going the fastest. Unfortunately, the thing that goes the fastest up also goes the fastest down, and we're seeing that now. Now, if we think about any of these big market crashes,
the elastic band theory. Exactly what we're talking about. He's describing it. I describe it in my trading. Deep Thought described it. This is such a thing that you really need to start considering, right? Now, people completely forgot about risk in 23 and 24, but they certainly didn't forget about it in 22, right? In 2022, when the market was down about 30% top to bottom, they weren't forgetting about it then. Problem, though, is that these incredible geniuses loaded the boat on the way down, and they were rewarded in 23 and 24. Will that happen again? Potentially. But what's more likely to happen is it continues down in the trend that it's happening on. We don't know how far down that trend goes. So rather than buying stocks when they're crashing down, buy stocks when it's crashing right up. Lala says SCHD sucks right now. Let's go take a look at SCHD. Let's do it in Outlier. Let's go look at SCHD and Outlier. SCHD. Oh, yikes. Hey, look at that sell signal. So Outlier 3.0 sell signal came on, looks like March 26th. Yeah, not a bad sell signal, I would say. Not a bad sell signal at all. Yeah, and exactly that, right? Just because it's a dividend paying stock doesn't mean that the asset is worth owning. Sure, you can get paid, let's call it 2%. I don't know what the dividend payout is in this, and it doesn't matter, because if it's gone from around $27 a share to $25 a share, that's a 10% sell-off, basically. A 10% sell-off right here. And you're cool with taking, 2% dividends for a year. So you need 5 years to break back even on the net asset value going down by 10%. Not worth it, my friends. Not worth it at all.
All followed the same cycle. If we think about the dot-com bubble, it went up with crazy mass euphoria and everybody kind of just jumped on board, and it got too risky and then it just totally depleted. Same thing happened with the housing crisis and the great financial crisis. People were getting unsustainable loans and they were trying to buy houses that they couldn't even afford, and banks were even lending on things that they knew that they probably shouldn't be doing because that person could never afford this actual house. And so it went higher and higher and higher until it broke, and then it totally dropped. This year is the same. We've been on kind of a constant bull cycle for quite some time here, especially last year going up over 20%, and the year before that going up over 20%. So it's just unsustainable. And so now we are feeling that hurt. In the same way that being too optimistic is just not going to be a very smart move, it's also not good to be too pessimistic when things drop or when things do hit that bottom. At the bottom, like the absolute bottom, when the market has dropped a fair amount and sentiment is at an absolute low, the worst thing you could do is blow this out of proportion. Eventually, things are low enough for long enough that it actually takes the risk out of everything. If we're at the lowest possible and things are starting to be more in line with what their value actually says, this actually takes the risk out of things, and this is exactly the time to be thinking about investing. Remember earlier when I talked about what Howard Marks started with, which was the fact that there's not just this market high and then a market low and then eventually a market high. The market high turns into the market low, which holds for a little bit and turns into the market high, which holds for a little bit and drops into the market low.
This can be somewhat deceptive because markets don't really hit their peak and then immediately crash. Somewhat deceptive, right? We can see years of sideways movement or even just a steady downtrend. It doesn't necessarily have to peak to trough right there, but just want to interject on that.
And right now, we're in that market low. We may still see a little bit more pain. It still could drop a bit, but for where we're at, we're starting to get to that point where we're just going to sustain in this low for a while. People are going to blow it out of proportion. People are going to say things like, we're never going to recover from this. This is totally different, and everybody should just run. But what we have to understand is literally every single cycle, everything follows this same pattern. And so if we're here now at the bottom, that's leading to get back up for a rise. In times of extreme negativism, exaggerated risk aversion is likely to cause prices to already be as low as they can go, further losses to be highly unlikely, and thus the risk of a loss to be minimal. As I've indicated earlier, the riskiest thing in the world is the belief that there's no risk. By the same token, the safest...
The riskiest thing in the world is to believe that there's no risk, right? Right. Taking a look at any stock out there and saying, hey, it should go up from here. The only value, the only price where it should go up from here is zero. There is no floor until zero, okay? And you can listen to any YouTuber you want, and they're going to tell you how much of a genius they are. But the reality is a stock can go down and down and down. And only once it gets to zero does it have an impenetrable floor. So just putting that out there.
And most rewarding time to buy usually comes when everyone is convinced there's no hope. So if you're seeing it on the news, you're seeing it here on YouTube, you're seeing it for sure in my comment section and other finance channels' comment section, people think the worst is coming. People think we are not going to survive this. And if that's the case, if that's what most people are thinking, this is exactly where Warren Buffett comes in and says, be greedy when people are fearful and fearful when people are greedy, because everyone's fearful right now. The best time to buy is during the pain, not after.
No. Sorry, Professor G. We're going to disagree on that. The best time to buy is when the pain has subsided, when the pain is not painful anymore because it's going back up this way, right? Sure, you can buy up here, but what you're looking for is the outlier trend template to reverse. Now, let's go over this. You guys know what it is, but for those of you who don't, when the 10 is under the 20 and price is under the 50, that is a bearish trend. Let's look at a different stock. Let's look at AT&T. This has had a lot of strength lately. When the 10 EMA is over the 20 EMA and price is over the 50 EMA, that is a bullish trend, okay? Now, you can look at a stock like NVIDIA and you can look at it objectively because you know the outlier trend template and you can say, wait a minute, wait a cotton picking minute here, Chris. This looks like a bearish trend. And I would say you're entirely right. You are 100% right. And in fact, if you went in Outlier, you would look at NVIDIA and you would say, that looks like a very bearish trend, Chris. Let me wait for the moving averages to load here. There you go. And I'm going to scoot over to let's go to the 3-month view. Look at that. That looks like a very bearish trend here, Chris. And I would say, you're right. You're right. And in fact, Outlier would tell you a lot of different buy and sell signals along this way here. But if you're looking at a buy signal within a downtrend, I would not constitute that to say, now is a great time to buy because it's still within a downtrend. The opposite of what Professor G is saying. You don't want to be buying as it's going down. You want to be buying as the moving averages are turning back up, okay? You want to be buying when the moving averages are pointing in the direction that you want to see them go, not when the moving average with the outlier trend template is pointing the opposite direction, right? It's that easy. It is literally that easy. You can go on any charting account, any charting platform out there. You can look at Robinhood. I don't know if it has charts. Thinkorswim, right? Thinkorswim is the TD Ameritrade broker. You get charts for free in there. You can go on Trade Vision, you can go on TrendSpider, you can go on Outlier, whatever. You throw those 3 moving averages on, just 3 lines, keep it pretty clean. And then you can see which direction it's going. Just plain and simple. And then if you're like, oh, Chris, but I'm dollar cost averaging into this. Listen, I've heard every excuse out there as to why dollar cost averaging is such a brilliant idea. The problem with look at this. PayPal had a PayPal round trip this, by the way. Look at that. Look at that. And tell me order blocks don't work. When you're dollar cost averaging, the crazy part about it, this is a perfect example. Yes. The crazy part about it is that if you're buying something on the way up versus on the way down, if you're buying 100 shares here, 100 shares here, and 100 shares here, your average cost is still the same as if it were going up 100 shares here, 100 shares here, 100 shares here. It blows people's minds when I say that, but averaging up at the same places, at the same volume as averaging down gets you the exact same average cost. And the problem with averaging down is that you are averaging into a loser. You're continuing to add to losers over and over and over. And I got bad news for you. I didn't say this. This didn't come out of my mouth. This came out of Paul Tudor Jones' mouth, one of the greatest traders ever. Losers average losers. You don't want to be a loser. You want to be a winner. And that's why when you average up into a trade, when you dollar cost average up, you're instantly winning. You're already winning when you put on the trade versus you're already losing and adding to it. Mahesh is the man. Wait a minute. Mahesh is the man. Wait. Mahesh is the man, and the man is here. What's up, Mahesh?
Hey, Chris, how are you?
Hey, man, I am super, super good. I got to tell you, we're getting absolutely floored by the number of people who are so stoked about the release of 3.0.
Yeah, I'm glad it has been crazy week. Like my wife is after me and she's like, when you gonna shave? I was like, give me a few more days. I'll be back to my like usual self. So it was a very painful last few days. But I'm glad that we were able to push all these changes. And we are working on the bugs and all that. But I think I'm excited to see how our members are going to use this new update.
Yeah,
So
for
that's what
sure.
I'm
I mean,
looking for.
Peter was just saying 3.0 is looking good to him. And I got to tell you, as you guys are finding those bugs, please report them to us in the Discord. You guys are making Outlier 3.0 tremendously better, right? We put our best effort out there, and then you guys are helping us say, okay, fine tune this, fine tune that, and just making it so much better. Hey, Mahesh West says 3.0 is awesome. Thanks for the upgrade.
You're welcome.
Ozzy Ian says, Mahesh is awesome. Golden Oldie says, thanks, Mahesh. 3.0 is the upgrade. Yeah, for sure. Mahesh, so what's been your favorite? Now, I know you probably haven't slept in days, but what's been your favorite upgrade on 3.0?
I would say like pretty much all the screens in my eyes, like one of the key thing was looking at the market breadth. Like even personally, I had to click on each sector every time, right, to see where the overall market is moving. And for my trading style, I usually like to make sure the market is in the moving in the right direction, sector is moving in the right direction. If they are not, I am usually in cash. So that was one of the big upgrade for me as a trader personally, and I'm loving it. Signals are great, more timely. Um, the overall dashboard look and feel, what I can do with the charts. I know there are some bugs that we are planning to resolve in next few days, but overall I would say that personally as a trader, this is a big upgrade for me as well. I was looking for it, forward for it. So yeah, overall I would say that it's a big upgrade for me as a trader as well. So
Yeah, and so it's kind of like the Men's Warehouse thing, right? I'm not just a founder; I'm also a customer, or whatever he says. That's totally us, right?
exactly. I mean, like literally, the way we work, right? The way we work is, it's not like, hey, we are building for our members only. Yes, we are building for them, but also how we can make our life easy, right? How we can make better decisions, how we can lose less money, right? How we can make more money. And the only way that's possible if you have good information with you. I know we're not going to win for 100% of time. That's, I mean, that's not going to happen. But can we reduce our losses? Can we have bigger wins? So I think that's the whole goal. That's the whole idea, how we operate and how we, build Outlier. So
Simon Slash has one question. Is this thing worth buying? Simon Slash, I found out something this morning that took my breath away. Mahesh, I don't know if you saw this. So Mahesh and I have had this conversation about how I want to enter the US Investing Championship and show how great Outlier is.
mhm.
And so we were like, let's not do it for 25 because we have some big upgrades coming. I didn't know about 3.0 at the time. And then Mahesh just last week was like, Chris, dude, you're going to kill it in 26. And Mahesh, I was looking at the results for 2024 this morning. I could not believe it. Dude, look at this, right? So these were my returns, and you guys have seen this before, 91.37%. Starting in May to November, that was my returns. That would have put me in first place in the long options category. I was like, what the frick? No way. So, and Outlier 3.0 is 3 times better than 2.0. And every single one of these trades was a 2.0 trade. So I'm like, oh my gosh, they're going to have to create a category for us.
And I can answer, Simon. I mean, is it worth buying? I would say, yeah. I mean, I am a co-founder. Yes, I am biased. It is worth buying because now you have better data. I mean, we are not guaranteeing that, hey, you're gonna be, true 100% of time, but you have better data. You can make better decisions. The data that's not available anywhere else. So I would say it's worth buying. At least I would spend money on Outlier if I am, not co-founder, I guess.
Ashley says it's 100% worth it. Let's see. Oh, Sean had a question. If you had the free trial for 2.0, well, carry a 3.0, of course. Like,
Yeah.
as long as you log in, it'll have turned over to 3.0. You don't have to do anything.
Yeah, we don't like, I would say, duo. Yeah, we are now upgrading to 3.0. You're not going to get access to it. We are not like that. You pay the price, it's for everybody. So it's not like we're going to hide some things from you or, not show you something. We're
Right.
not like that. Yeah.
Super cool. All right, Mahesh, what other upgrades do you want to talk to them about?
Right now, I would say that I will let members explore. My focus right now is simple: fixing the bugs for next few days. To be honest, I mean, I can come again on your show maybe next week
Sure.
if I have to. But I think between you and I, we probably need to work on documentation, which will talk about that after this call or later time. But something that with this new upgrade, we want to make sure that we have demos in place, we have documentation in place, and that is something that Chris and I we talked about that will be available very soon.
Yes.
But overall, I think you have pretty much shown everything what's there.
Yeah.
I'm happy to answer question if there are any questions for me.
So yeah, put some questions that you have for Mahesh in the chat. That's a great idea. And then to Mahesh's point, we are going to be creating what we're calling Outlier University. And we're going to take you from being able to not know a single thing about stocks to having different levels, basically. And where it's like level 1, you understand how to trade stocks. Level 2, maybe you understand how to trade options. And by level 3, you'll know everything that I know. And best part of all, 100% free. It's going to be tremendous, Mahesh. It's going to be amazing for those members of Outlier. 100% for free.
Yeah, absolutely. I mean, there's no point of, hey, you'll pay for the course. And, I think the education should be free. And that's kind of like our goal is that while we are building a great platform, we also want to build like strong, like a good education around it. In the end, you know, what I'm interested most is people can actually benefit from it. If someone is paying us $300 a year, and if they are not getting worth for $300, I would say cancel it. Honestly,
Well
I want to make sure that they are getting way more worth than $300. And if that's true, then I'll keep on collecting that. So no issue.
Yeah, I like that. Ozzy Ian says it's going to pay for itself and more. Like Mahesh is saying, right? I mean, if we can't give you $300 of value within like 5 seconds, we've definitely done something wrong. We're gonna over provide so much for that. Deb says 3.0 made me take the leap, and I love what I see. It's so cool.
Thank you.
Dave says 100% worth it. And even with 2.0 more, he more than made the investment back for the life of Outlier. There you go. Adam says 100% worth it to him. Lilani says, I'm ready to jump. My family has no idea how much I've lost. They're going to hate me. Listen, I've been there. Mahesh knows. I've blown up my account twice. But always remember, like Mahesh said earlier, right? Cash is a trade. And especially in a market like this, cash is a trade. And I think that we have really made it simple, Mahesh, with this master key widget right here, right? If it's locked up for bullish and locked up for bearish, cash is your trade. Cash is your trade. And it can be for a while. But it's a lot better than losing a lot more money than you ever planned on.
I can vouch for that. I mean, I have lost money too, so it's not like I have a magic, wand here. I have lost money too, and I'm glad that I have Outlier with me because I am using it myself, and I stay in cash like majority of the year. Like if you ask me when I'm in market, very few times. This is just me again personally. Not everybody has to do that, but personally, I try to stay in cash more than in the market. So that's just my personal choice how I use Outlier. Chris, you obviously you have your way of doing things, and I know a lot of our members they use it a little bit different. So I think I agree with you. Cash is a trade,
Yeah.
and I'm glad I'm in it right now. So
yeah, no joke. Oh man, Bender had a great point with basically the master key locked up right now. It's the perfect time to go fix the bugs, right? So it's go time when everything unlocks. Yeah.
Oh, yeah.
Manuel says, "Oh, go ahead, Mahesh."
No, I was just gonna say bug fixing is, my full-time job. Trading is like I would say that I do it whenever I get chance.
Yep. Emmanuel says it's indeed worth the money currently, but I have an idea about the trend lines. Could they also show the number, like exactly where they are compared to the course of the stock? Actually, we have that already. Check this out. So if you go into here, and so I've been playing around trying to find different things too, and you click this little button, you see just above my shoulder up here, there's a little button that says 16.2. If you click that, it'll actually list out the moving averages and the prices of everything. Every moving average, the current price, everything you want to know is right there. And then if you don't want to see it anymore, you just click it and it goes away. So there you go. Emmanuel, we're already on top of that.
Yeah, and then there are like some of the bugs on these features, and we're gonna make it perfect in next coming days. So
yes. Oh yeah, for sure. Awesome. Deep Thought says we need a cuss jar for Chris. Every time you say should, you should put $1 into the jar. Invest when the jar is full. Yeah, I love that idea. Right? If you need some investing funds, that's a great way to start. There were a couple things in the chat that I marked here. Let me read these real quick. Mike had a question. Will you be sharing any of your backtesting video or live? So my plan is to make the world's most boring content out there, but useful to you. I will be doing live backtesting. But it's not going to be a show. It's basically going to be me with my headphones on, doing math on the screen, looking at buy signals, looking at sell signals, looking at how I can optimize my strategy, making sure first off, my strategy works in 3.0 just as good, if not better than it did in 2.0. And it'll be live right here on YouTube. And like I say, it's not going to be as high production value as we normally do, but the financial value of it will be immensely high. You've probably never seen anybody do live backtesting, right? Because it's not about feeding your ego. It's about saying, what can I find? What correlations can I make? What patterns can I develop that show me that I have a greater statistical edge than I would otherwise? That's where my head is at. And I love it. Oh my gosh, I love it. I get a whole pot of coffee now that Lint's over, whole pot of coffee to myself, maybe even a couple caffeine pills on top of that so I can really zone in. Right. I love a good get jacked up on caffeine and then just like go to town. Yeah, it'll be great. Mark says, I'm with you on reading the paperback and listening to the audiobook, right? I didn't know others did that. Only geniuses like you and I do, Mark. Only you and I do, my friend. I learned it from you. I mean, you were the one who taught me that, dude. Brian's channel says, if you have a buy signal, but a red overlay, oh, perfect. If you have a buy signal and a red overlay, once the overlay turns green, you decide to enter. For an exit, do you use the heat map reading from the buy signal that came before the entry? It's a great question. Let's do some of that live together. So this is on NVIDIA. And let's find a spot with a buy signal within a red overlay. And then a green overlay that comes later. So not there. Buy signal within red overlays. That may not be as frequent of an occurrence in 3.0 as it was in previous versions. But we can use this one. That's a white overlay. So let's see if I zoom in right there. I think that will stick. Yeah, let's go. We can now zoom in and out better than we could before. So it looked like I had a green overlay like the next day. So let's see. It started at a heat map value of 31. Okay. We can see that here. Now for me, I would want to see an exit at 63 on the heat map value. So let's say if I got in, and this is on November 6th of 23 on NVIDIA. November 6th of 23. Just gonna mark it on here, November 6th of 23. Hey, that was a good signal, wasn't it? And then I held it from, what did I say earlier? G31 up to 63. So if I didn't have a reason to get out otherwise, I could hold it up to 63, which would be roughly here. Tell me it's not the top candle. Yeah, 63, exactly. On November 21st. There. Look at that. One candle from the top. So you could go here to here, make 11% in the span of 12 days. Not bad at all, right? Now, your question was, would you wait for it if you're doing the spread? Right? If you're doing a spread, let's go up to here. If you're doing like a 10-point spread based on when it gets to the green overlay versus the buy signal, my personal take would be if I got in with the crossover here, I would probably still put it at where the buy signal came through. So at 31. So if I were doing a 10-point spread, but I got in a couple days later, I would say, okay, I would get out at 41. And then I would go, okay, so it skipped from 40 to 44. I'll get out at 44, right? But Brian, the question here to you is, what is your plan, right? I can have one plan, but you need to come up with your own plan. Which is a great question. It's a great question. All right, next question. WJR, because it's easier to tell people to lie. Oh, okay. Because it's easier to tell people to lie than it is to convince people that they have been lied to. That's why the majority of people will keep buying the dip syndrome. Yikes. Dr. J, Chris's light years. Oh man, thank you. Chris's light years ahead of the game. Those 2,000 videos were all necessary to get you here and teach us what the hell is going on with all this info put together. Thank you. Well, thank you. That's super sweet of you, Dr. J. Super sweet of you. All right, Mikey Mike and Wes say that you guys want to be ultra bored. You guys want to be ultra bored. Luke is like, I would love to watch some live back testing. All right. I got you guys. Wait a minute. Kevin says double the DCA when it's going down, according to Tom Nash. Yikes. Speaking of, I still have not coordinated with Tom Nash. That we will have very contentious conversations when we get to that point. So let's do this. Let's go ask ourselves this question here. What did we learn from this? What did we learn from that video? There. What did we learn from this video? I learned that Professor G knows what he's talking about because it's the same thing that I'm talking about. The market cycle is real. The market cycle is how the market works because people get more greedy and then they get more fearful. And then you want to be on the right side of that curve, right? Because all stocks are bad and every once in a while they act right. Golden Ollie says, if you use your greed spread like that, aren't you cutting your winners short potentially? Yes, 100%. I am cutting my winners short potentially. But that's because the elastic band theory, right? The more greedy it gets, the faster I want to take my profits and get out before it snaps back on me. And that's the kind of data you cannot get anywhere else. But let's look at today's member highlight. Let me go over to my YouTube post real quick. Today's member highlight is here. Red Rocket says, a whole week of not losing money in this crazy stock market. That's his win of the week, right? Thank you, Chris and Outliers. So glad I found you. Dude, not only is it a full week of that, but now an Outlier 3.0, you can see in 1.21 gigawatts of a megasecond here just how quickly you can look and see, hey, you know what? If it's bullish and bearish locked up on the master key, maybe it's time to be cash. Maybe it's time to be in cash. Oh yeah, who is this random guy talking? Thank you for that segue real quick. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where Outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And don't forget, we still have the Outlier deal going on. The Outlier deal right now. Do I have it pulled open? No, I don't. Let me type it in real quick. OVT. There we go. OutlierDeal.com. We are running a contest to celebrate the launch of 3.0, and we're giving away $1,000 and a free year of Outlier when you go over to OutlierDeal.com. We have this morning was under 9,000. Now we have 9,185 entries. Isn't that crazy? You have 10 days left. 10 days left. So grand prize winner gets $1,000 and Outlier 3.0 free for a year. First runner up gets $200 worth of merch and my 5 favorite trading book bundle. Second runner up gets $150 worth of merch and my 5 favorite trading book bundle. So it's still a raffle, right? Even though Deep Thought has hacked us somehow with 297 entries. It's just like the lotto. He just has 297 tickets. There's still a chance that you can be the winner. You can be the winner. I am dying, bro. I spit out my coffee. You are welcome. So be sure to share your stories in the Discord, right? We are trying our very hardest to give you the very greatest, the most tremendous trading experience possible. And we can only do that if you help us. You have to be so much better than Joe Biden, so much better than Hillary. You have to share your stories in the Discord. Yeah, I know I'm overusing it, but I enjoy it, right? And of course, the first rule of Outlier is you tell everyone about Outlier and hit the like button so YouTube tells everybody too. Hey, real quick, what is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. And if you're ready to save time, make money, and start winning with less risk, head on over to Outlier.com and you can save 64% on Outlier 3.0, just $299 for the year. Or if you're on the monthly trial, dude, 1-click upgrade, you'll save 64%. Now, my style of trading using Outlier is called the golden ticket trading strategy. And that's where the market tells us what it's doing. So looking at the market, let's go back to the SPY. Now, at some point, I will be trading. And this would be around the time that I would trade. Now, of course, before the market closes. But I'm trying to do my best to teach you everything we can while the market is not cooperating, right? We have the 10, under the 20, price under the 50. Currently sitting on a sell signal in the SPY. I'm trying to get to light up. I don't know why it's not lighting up. But we have all of this cross sell. So this is definitely a bearish market environment. So the SPY signal is a sell. Market trend is bearish. However, market breadth, you can actually see the market breadth right down here. I'll make that a little bit bigger for you. You can actually see the market breadth is getting more bullish. Now, one thing I noticed, I couldn't believe this earlier, the Outlier 3.0 signals. This is measuring how many buy and sell signals we have. And then I like to put a 10 EMA crossover. Dude, check this out. It peaked at 1. Outlier 3.0 signals had 99% of the market on sell signals by April 9th. Dude, I had no idea that it was going to be like that. 99% of the market had a sell signal on April 9th. And if you're the one Lone Ranger thinking you can save the economy by buying it, I got news for you. You are about to get run all the way over. You're about to get run all the way over. So yeah, just hang tight. Just hang tight. Hold cash, because remember, cash is a trade. And in the meantime, learn as much as you possibly can about how to trade successfully. I just ordered a new book. So I'm continuing to learn, and I will be doing some back testing. I don't know what day I'm going to start doing that on. I probably won't even make an announcement. I'm just going to go live on YouTube, and you can join in if you'd like to, ask questions if you'd like to, and also propose some ideas, because my goal is to not just win the U.S. Investing Championship for 26, but to dominate it. Like, it's not even close. Like, they will put it in the record books. In fact, one of my trading heroes, his name is he's one of the turtle traders. His name escapes me all of a sudden. frick. How can I say he's one of my trading heroes and I forgot his name? Daggum. I have to find this real quick. It's going to drive me absolutely crazy. Turtle traders. Jerry. God, what's his name? Jerry. What's his name? Jerry, come on. Jerry Parker. Jerry Parker. This guy. This unassuming Southern gentleman. This unassuming Southern gentleman basically said, I want to have more money than God. Right? His name is Chris Shule. His name was Robert Paulson. No. Jerry Parker said, I want to have more money than God. And I just, when I heard that for the first time, no. It was Master of the Universe money. That's what it was. Not More Money Than God. That's also a great book, by the way, More Money Than God. He said, I want to have Master of the Universe money. When I heard this like unassuming dude say, I want to have Master of the Universe money, I was like, okay, all right. If that's what we're going to do, let's make this happen. Let's make this happen. His name was Robert Paulson. Exactly. So thank you all so much for coming today. We have a huge journey in front of us. And we're just getting started with Outlier 3.0. Be sure you click on one of these 2 videos that YouTube is popping up right now. And I'll see you on tomorrow morning's live stream. We'll talk soon.